Welcome, students. Today, we will explore the idea of modules in accounting systems. This may sound like a technical word, but by the end of this session, you'll understand it clearly, even if this is your very first accounting lesson or if English is not your first language. What is a module? In the context of a business accounting system, a module is a program or a specialized section within an accounting software package that focuses on one particular area of work. Think of an accounting software as a large office building. Each room in that building has a unique purpose. One room might be for sales, another for payroll, another for tracking stock. These rooms are like modules in your software. When you open a module, you only see the tools and information related to that part of accounting. For example, if you are inside the payroll module, you won't see sales invoices or inventory levels. You'll only see salary records, employee information, and tax deduction calculations. This organization makes the system easier to use, safer, and more efficient because people only access the part they need without getting lost in unrelated data. Single module versus multiple modules. Some accounting software packages are very simple and include only one module. This is called a standalone module. It's like having a one-room building. Everything you do happens in that single space. For example, a very small business might only use invoicing software to issue bills to customers and record payments. However, most modern accounting packages contain several different modules, each performing a different task but connected to each other. When multiple modules work together in one software, we call it a suite. In a suite, information can flow between modules automatically. For example, if you record a sale in the invoicing module, that information will instantly update the receivables ledger, the inventory records, and even the general ledger without you having to re-enter the data. Different types of modules in an accounting system. To understand how modules work, let's imagine you work for a medium-sized company using a full accounting software suite. The suite may include the following: invoicing module. This module is designed for creating and managing invoices. Whenever your company sells a product or service, you open this module, fill in the customer's details, describe the product, set the price, and add any applicable tax. Once you confirm the invoice, it is recorded in the system, and the receivables ledger is updated automatically to show that the customer owes you money. Inventory module. This module keeps track of the goods your company owns and stores. It tells you how many items you have, where they are stored, and their total value. When a sale happens, the system reduces the stock level in the inventory module so you always know the exact quantity left. This prevents problems like selling items you don't have in stock. Receivables ledger module. This part of the system records all the money owed to your business by customers. It tracks the due dates, the amounts, and whether payments have been made. If a payment is overdue, the receivables ledger helps you follow up with reminders or late payment fees. Payables ledger module. While the receivables ledger shows what customers owe you, the payables ledger records what your company owes to suppliers. It keeps track of payment deadlines so you can pay bills on time and maintain good relationships with your vendors. General ledger module. This is the core of the accounting system, often called the heart of the software. It collects information from all the other modules and produces the main financial statements: the income statement, the balance sheet, and the trial balance. It is the master record of all financial transactions. Payroll module. This module deals with employee payments. It calculates wages or salaries, deducts taxes, records overtime, and produces payslips. In larger companies, the payroll module might also connect with government tax systems to report salary and tax information automatically. Job costing module. Some businesses work on projects or specific jobs, such as construction companies or event planners. This module helps track the cost of each job separately, including labor, materials, and other expenses. This way, the company knows if the job was profitable or not. Non-current asset register module. Every company owns items like land, buildings, machinery, or vehicles that are used for more than 1 year. This module records all these assets, tracks their purchase date, value, and depreciation, the reduction in value over time. This is essential for accurate reporting and tax calculations. Report Generator module. This is like the reporting office of the accounting system. It allows you to create customized reports for decision-making, such as monthly sales performance, expense analysis, or cash flow trends. Managers and accountants rely on these reports to make better business decisions. Why are modules important? Modules provide several key benefits. First, they keep the system organized. By dividing the software into different sections, each with a specific job, it's easier for users to focus on their work without distractions. Second, they improve efficiency, since information flows between modules automatically, reducing the need to re-enter data. Third, they enhance security by allowing access control. For example, payroll data can be restricted to HR staff only. Finally, modules improve accuracy because the integrated nature of the system means that one entry updates all relevant records. A real-life analogy. Think of a hospital. A hospital has many departments: emergency, surgery, pharmacy, radiology. Each department has a clear role, specialized equipment, and trained staff. Yet all departments work together to take care of patients. Similarly, in accounting software, each module is like a department, specialized in one area but connected to the others, so the whole organization functions smoothly. Exam tip. For your FIA FA1 exam, you should be able to find what a module is. Explain the difference between a standalone module and a suite. Give examples of common modules and describe their purpose. Explain why having multiple modules is beneficial to a business.